So the question is the Fed going to reduce interest rates by 25 basis points? Is it going to reduce interest rates by 50 basis points? That is the big question as of Wednesday, the 18th of September. Now, I've been stating over and over again that interest rates, especially in the last 2 months, that the Fed will probably cut interest rates by 50 basis points. And that got a lot of drama from my colleagues in Wall Street and a lot of drama from the hedge funds. You're talking trash, it's never going to happen, the economy can't, they're going to send out the wrong signal, etc. So the chance of a 50 basis point rate cut 2 months ago was 0. And now 61% of analysts on Wall Street are saying that there will be a 50 basis point cut. So this is May Valensky with Driving Markets. You can share, subscribe, comment. We're going to look at the economy. We're going to look at interest rates. We're going to look at inflation. We're going to look at overall direction, what's likely to happen in the next few months. So as you're well aware, the official level of inflation has been falling. The official level of inflation has been falling, not the unofficial. The unofficial is what it costs you, Joe Public, you, the consumer, to get your basket of groceries and goods every week from the shop. And you realize that your £100 or your $100 is just getting less and less and less. And we're not talking yet about shrinkflation, where the same goods are just shrinking in size or lower quality. What we're talking about overall is real cost of living. So the real cost of living or the cost of living or inflation has been a concern of some sort to the Fed. A lot of the time, they're either trying to gaslight you or mislead you and make you ignore the real factors or the real facts that's going on within the US economy or the UK economy, stating, oh, it's good, the economy's fine, it's moving, it's robust, it's continuing to grow, we've got great GDP. Well, all of those numbers have been misleading. We've seen that through employment and unemployment. So the main factor concerning the Fed at the moment, the main number one issue is the soft labor market. Remember, up until recently, until the actual truth did come out, that the Bureau of Labor Statistics in the US has been misleading you, to say diplomatically, the minimum on the numbers, where actual employment numbers are far less people employed than they have portrayed over the last 12 months. There's a missing number of about 818,000 jobs have just disappeared, don't exist, because they were never there in the first place. But considering you've got real rising unemployment, you've got a slowing economy, and you've got job openings that simply don't exist, because the medium-sized business, which is the main provider of, or the main builder, the main building block, the main part of the overall US economy and the UK economy, is this small to medium-sized business, they are not employing. So the number of job openings available is reducing. And as a result of the number of job openings reducing, what do you have? You have less demand for jobs, and therefore job openings official numbers fall, and unemployment is rising because there's more and more companies are laying off staff. For example, the high-tech sector has laid off around about 500,000 workers in the last 3 years. So unemployment is rising, and that is concerning the Fed, the US central bank. Jerome Powell and his colleagues or cronies are seriously concerned that rising unemployment could push the economy into recession. But the economy is in a recession. The economy is in a recession already. What's happening is that's an unofficial recession. It's not being reported. Why? Because the GDP, which is the overall measure of if an economy is in growth or in a recession or not, measuring welfare and services and products sold, is obviously being robust or being manipulated as far as misleading the general public. So GDP is actually falling, which is the profitability of the country is falling and it's going into a recession. It's guaranteed to go into recession. Not KAMALA nor Donald Trump can actually stop it. As I said on previous videos, it's really going to be the deepness or the severity of that recession would be the measure as whether it's going to be KAMALA who brings us out of recession faster or Donald Trump. I personally hope on a political view that KAMALA does not make it into the White House, but who's to say that? I know there's many viewers are Democrats and they're voting for KAMALA for all types of particular reasons, which is fair enough. That's what voting rights give you. My personal opinion is that Donald Trump, even though erratic, will do a better job at running the economy. So going back to the Fed, what's concerning the Fed, which we've done this on our Zooms and our mentorship and our courses, what's concerning the Fed at the moment is the worry about a recession. But the recession is going to happen. The Fed can't stop it. So what they're likely to do is reduce rates significantly between now and December. I can see rates dropping 6 to 8 times between now and December, down to about 3.5%. The question is, will the UK